Question number 3, high water mark. Okay, so I'll make it simple. So high water mark, it means it's a benchmark or limit or level which is set by the fund managers, and they have promised it. If they are able to push the NAV above this limit, then only the incentive fees will be charged, right? So we'll take this example. First of all, I'll walk you through the theoretical part, which is the high water mark. It means it's a level, right? And then ensure that investor will not be charged twice on the same gains. Incentive fees apply only to the extent that the account value is above the highest value previously recorded. So this statement explains a lot. Let's take it. So this was the investment portfolio value at initially, right? And then the fund manager, they set the high water mark. So it means it's a limit which is 130. If the value from 100 to reach to the 130, so it means then only that particular fund will accrue the incentive fees or commission. So if you see in this case, and let's say this was the quarter of beginning and this was the quarter of let's say quarter 1, quarter 2, let's assume it quarter 3 or quarter 1 or let's say quarter 1, quarter 2 and quarter 3. If you see here in first quarter, the fund achieved the target, right? And next quarter, if you see, the fund went down. So NAV, net asset value of a fund, went down and here, so reached at here, so which is 120. So it means in this case no fees will be paid, incentive fees will be paid to fund managers. And another, the limit was, or I would say the high water mark, which was set at 143. So it means, so in third quarter the fund reached to the at 143. Here again incentive fees will be paid or generated. So that's how your high water mark works. So it's simple, it's a standard benchmark. So will be set by the fund managers, and even so this is like mutual agreement between investor and fund manager. So they will decide, they will set it, and accordingly if they achieved, then investor will pay the that is incentive to the fund managers. Simple. Okay, the highest net value or highest net value net of fees that a fund has reached in history. This is a feature which ensures that investor will not be charged incentive fees twice on the same gains in their portfolio's values. This achieved by limiting the incentive fees to apply the extent that the current value of an investor's account is above the highest value previously recorded. Clients are not charged an incentive fees if the latest cumulative return does not exceed the prior high water mark. I'll make it simple to this. If you take the example of the high water mark, let's say the NAV of this portfolio is 100, right? So in quarter 1, the fund NAV reached to the 120, and let's say the high water mark was set at 120. Right, high water mark. So it means in this case, in first quarter, the fund reached high water mark. So it means on a 20 rupees, because only fees will be charged on gain, not on capital, because this is the part of capital or base amount, I would say, capital. Fees only charged on gain. So here fees will be charged on 20, and whatever the percentage is, let's say if you calculate the fees, which is 20%, which is 100, so 4 will be paid to the fund managers. What about quarter 2? Let's say at quarter 2, so the limit was set, which is 130, right? High water mark which was set, which is 130, and quarter 2 again, let's say we have reached it. Quarter 2 we have reached Then what about calculation? See, up to 120 we have already paid the fees, right? So it means 130 minus 120, so net which would be around 10 rupees. So where on 10 rupees you can charge 20% as incentive fees, and that would be around again, or 20% it goes around 2 something, so 2 rupees will be paid. But let's say in next quarter or quarter 3 which wasn't good and fund did not meet the high water mark which was set, instead that fund value declined, right? So at the quarter end value was 130, but now the value is 120, and the high water mark was set up to 130, it was around 140, let's say. So it means in this case your fund is not able to match the high water mark limit, then you don't need to pay the fees on this 120, because up to 140, or I would say up to 130, you have already paid the incentive fees. Then why will you pay the incentive fees again on same value? And that's the meant of this statement as well. So you don't need to pay the fees again and again. So once you reached it, but yeah, let's take the example of quarter 4. Quarter 4, if fund reach out to the level which is from 120 to 140, or maybe let's say 140, let's take the example of 140. If reached at 140, then here again incentive fees will be accrued. But how? So you can do the calculation is like up to 130 you already paid it, so 140 minus 130, which was the previous high water mark set at this level. Then here the 10 rupees which you can see, on 10 rupees which you can charge again 20% as incentive fees. So it means 1 rupees or 2 rupees which you can pay to the fund managers. That's how your calculation will works. I'm sure this the one slide presentation will help you a lot to understand about it. And in any fund accounting interview you would expect question on high water mark, how the high water mark work, how the calculation will work. So I would request you, so whenever you will sit for a fund accounting interview, please carry pen and paper, and describe this example on paper, request panel or ask for permission. So ask them like, can you please allow me to write something on paper if you see any question on high water mark, and then draw this example and explain it. I know this one would be a bit difficult to explain theoretically, but if you can put it in example, you would explain it, very easily. It's your call, but I would request you to please carry pen and paper and then write it down. Then that would be very easy to understand even to someone else who have asked question to you, and even that would be easy to you to even explain it. Okay. So all the best if you're looking for any interview. We'll see you again in different session. Yeah, but be connected with this session, guys, or series, I would say, right? We'll cover the very important aspect from a fund accounting side and from an investment banking side as well in upcoming time. And please, if you see the subscribe button below, then subscribe to the channel. See why I'm asking you for subscribe, because your subscription will help us to reach this content to the people who are desperately looking for a job. That's what your contribution is required. So please subscribe it, appreciate it if you like this content, and share with others as well. So now I'll take a leave. We'll see you next session with another question or different questions from fund accounting side. Okay, so I'll take a leave now. We'll see you later.